A surprise fall in inflation raises hopes of a pause in rate hikes. A former senior federal Liberal MP alleged to have been part of a plan to funnel money to him in return for government contracts. And a parliamentary inquiry recommends banning online gambling advertisements. It's Thursday, the 29th of June, 2023. Welcome to Fear and Greed, Australia's most popular business podcast. I'm Michael Thompson, and good morning, Sean Aylmer.
Good morning, Michael.
Sean, you've got a great interview coming up today after the show. Not one, but two guests today. Peter Gray and Larry Diamond, the co-founders of Zipco.
One of the things that I really noticed from this interview with Peter and Larry, they've been together 10 years. In fact, last week, Zipco had its 10th birthday, and they just like each other. They get on really well, which I think if you're in business with someone for 10 years, how can you get on so well, so particularly when they've been through the ringer and back? Zipco and the buy now, pay later industry have had an amazing ride and an amazing fall. We talked to them about that. We talked to them about regulation that's coming to the sector and prospects for the company itself. It's a great chat with the two of them.
Yeah, look, I reckon if you listen to one interview this week, I mean, take your pick, really.
Yeah, absolutely. I everyone a gem.
That's right. In fact, this one's a diamond, a Larry Diamond.
Like it. Nice.
Thank you. The main story this morning, Sean. Inflation fell last month thanks to falling fuel and holiday travel prices, but probably not enough to prevent the Reserve Bank from lifting interest rates again.
The pace of inflation fell from 6.8% in April to 5.6% in May, according to the Bureau of Statistics. It was well below market economists' expectations and sent the Aussie dollar lower and the share market higher. If you exclude volatile items, though, such as petrol prices and holiday travel, annual inflation fell only modestly to 6.4% from 6.5% the previous month. That remains uncomfortably high. That seems to be the euphemism being used at the moment, according to the experts. Now, this is a new series of data from the Bureau of Statistics, and while the Reserve Bank relies mostly on the quarterly figures, the central bank has said it's watching this monthly series closely. Treasurer Jim Chalmers yesterday said the data showed that inflation was moderating, but not as fast as he would like. He was speaking after news broke that the budget surplus this financial year will actually be bigger than the $4.2 billion forecast in last month's budget. That's thanks to the very, very strong labour market and high corporate taxes.
Sean, it sounds like good news, at least in terms of interest rates. What prices are going up and what's going down?
Well, rents have been a major driver of inflation over the past year or so. So too energy prices, thanks to the disruption caused by Russia's invasion of Ukraine. Electricity prices are up a massive 14.1% over the past 12 months. And of course, they're heading higher. On the flip side, interest rate hikes are impacting household spending, and as a result, prices in some other areas, such as clothing and footwear, have actually fallen. In some sectors, like construction, prices are still rising, but nowhere near the pace of 12 months ago. So there are a lot of moving parts in the economy and in that inflation number.
We've talked, Sean, about excluding volatile items and the reason why that is done in order to give a more accurate trend underlying. And you mentioned that petrol prices and holiday travel are considered volatile items. And I ask you this every time. I get petrol prices because they do kind of fluctuate so much. But why would holiday travel be counted as something that is volatile and should be excluded in order to give a more accurate reading?
It's very seasonal. That's one thing. And because you have school holidays and things like that. And the timing of the school holidays change during the year, so that's a reason. But just any of those items that tend to jump around year to year, they're much harder to seasonally adjust, so they like to exclude those.
Okay, all right. Piece by piece, it feels like every month I'm now putting together a more comprehensive list of what would be classed as a volatile item. Maybe I'll just ask you for that off air. Sean, can you just list all the volatile items and then I'll stop asking you on air every day? Sean, the big question is, of course, are we going to get more rate rises now from the Reserve Bank?
Well, yesterday's data certainly gives the Reserve Bank a reason to pause, but the monthly data jumps around a fair bit, and undoubtedly the central bank is still very worried about wages and wage pressures pushing up prices. Inflation peaked last December. We can confidently say that. We can also confidently say it's on the way down. In fact, if you average the last 3 monthly figures, inflation's running about 6.2%. Much better Still too high. The consensus among market economists is that there is still a rate hike or two in the offing. Bond markets have priced in about a 50-50 chance of a rate rise in the next 5 weeks. There are 2 Reserve Bank board meetings over the next 5 weeks, so there's a 50% chance that at least one of those will end up with higher rates. So the short answer is probably yes, we are going to get more rate rises.
Oh, thank you. How did local markets respond?
The S&P ASX 200 closed up more than 1% to just under 7,200 points. It followed that inflation data and also a strong lead-in from Wall Street. Interest rate-sensitive stocks, consumer discretionary, real estate and financials did best. Among the large caps, National Australia Bank and Westpac both rose nearly 2%, while Commonwealth Bank and ANZ were up more than 1%. REA Group jumped 3%. Goodman Group was up more than 2%. In fact, the only top 30 stock to go backwards yesterday was CSL. The best among the consumer discretionary stocks were Lovisa, Super Retail, Eagers Automotive and Domino's. As I mentioned, it was another good day for real estate stocks. 2 in a row, Michael. Pretty good for that sector. Real estate stocks carry plenty of debt, so they tend to underperform when rates are rising. So the milder inflation and hopes that rates won't have to rise as much is good news for property companies. Mirvac, Lendlease, Stockland and Charter Hall all did well yesterday. Best on the day was the Star Entertainment Group, up 12%. Now, it's had a horror run on the back of multiple state inquiries and fines, and its share price is about 1/4 where it was in September 2021. But yesterday was a good one for the gambling group. The worst performer was Bega Cheese, which on Tuesday said it had sold its Vegemite factory. That's the property, not the asset, and other property sales are on the cards after it flagged a large impairment. Yesterday, it closed down more than 8%.
All right. And what about international markets?
Oil prices rose after a fall in stockpiles in the US. Other commodities were mixed, though gold continues its recent slide. Bitcoin is holding on to gains. It's trading around those one-year high levels. Now, over the past 48 hours, asset manager Fidelity is reportedly prepared to file for a spot exchange-traded fund, an ETF, based on Bitcoin. That's yet another asset manager doing it. That is certainly pushing some confidence into that market. And the Aussie dollar we mentioned at the top of the show, it fell back on the inflation news. It's trading under 66.5 US cents.
All right. There's a bit happening today, Sean. We'll be back in a moment with the rest of the day's business news. Sean, Government Services Minister Bill Shorten is seeking advice about how to respond to allegations a consultancy sought to funnel money to former Liberal MP Stuart Robert in exchange for government services contracts.
A pretty amazing story, this one. Shorten said he had immediately asked for advice from his agency about how to investigate claims contained in a sworn statement tendered by a whistleblower to a parliamentary committee that's looking into Stuart Roberts' links with consultancy Synergy 360. According to the Financial Review, the statement alleges that a consulting company run by friends of Robert established a firm to funnel money to the MP in return for him using his position as a minister in the Morrison government to help the consultancy and its clients win government service contracts. Quite remarkable allegations. Now, Robert vehemently denies the allegations. He pointed out that they were made under privilege, not in public, and he said it's an abuse of that privilege. He also said there is zero evidence to support the allegations. Asked about whether the issue should be a matter for the National Anti-Corruption Commission, which is set up for this type of thing, Shorten said it was up to the independent commission to decide, but certainly we're going to hear a lot more about this one in the next few days.
Yeah, it's a big story, that one. Now, I mentioned this next one at the top of the show, Sean. A parliamentary inquiry has recommended banning all advertisements for online gambling within 3 years.
The final report of the inquiry into online gambling harm in Australia put forward 31 recommendations and called for a crackdown on an industry that was, in its words, manipulating an impressionable and vulnerable audience. One of the recommendations is to phase out online gambling ads over 3 years. The first stage of that plan would feature a ban on online gambling ads during school pick-up and drop-off periods, as well as the removal of exemptions for the ads during news and current affairs broadcasts. And then the ban would progressively become more stringent. Ads on racing channels will be exempt under the proposal. Other recommendations put forward in the report include a national strategy for online gambling harm reduction, a public education campaign, a requirement for gamblers to have their identities verified before wagering, and a harm reduction levy. Now, Prime Minister Anthony Albanese spoke about it yesterday. He described gambling ads as reprehensible, and he said a range of measures are needed.
Sean, the latest QS World University rankings have named the universities of Melbourne, Sydney and New South Wales in the global top 20, while ANU, Australian National University, has fallen down the list.
I get a bit confused with the university rankings, so I had to do a little bit of work yesterday. So there's three main university rankings.
That's confusing.
Yes. So the QS World University rankings, which were out over the past 36 hours or so, the Times Higher Education rankings, and the academic ranking of world universities. Now, Australian universities do differently in different rankings, obviously. Across all three, the University of Melbourne really comes in best across all three. The QS rankings changed methodology this year, and the ranking now has a bias towards large comprehensive unis with big enrolments of international students. As a result, ANU fell down the rankings from 30 to 34, while Melbourne Uni went from 33 to 14. Sydney Uni went from 41 to 19, and the University of New South Wales went from 45 to 19 as well. It means 3 Australian universities are now in the top 20. That's pretty remarkable. 9 in the top 100. Michael, just out of interest, the top 5 in the world rankings are MIT, Cambridge. So MIT is in Massachusetts, in Boston, outside of Boston, Cambridge in the UK, Oxford in the UK, Harvard and Stanford.
That's quite an interesting ranking, and those changes are interesting. Does that mean, if I've taken accurate notes as you've been talking, that ANU effectively went from being the best Australian university to the 4th best in one go?
Yes, but they did point out it's not necessarily because they've basically changed the way they're ranking them. And so and ANU has nowhere near the number of international students that the University of New South Wales has, for example. Nowhere near as big. So that's why it fell down the rankings. But it's not a good look for ANU.
Yeah, and suddenly ANU prefers the Times Higher Education ranking or the academic ranking of world universities. I mean, that's the benefit of having 3 different ranking systems. You can just pick your favourite.
Totally. Yeah, absolutely.
Sean, Harvey Norman yesterday, share price jumped 5%, even though the retailer warned it is on track for a sharp fall in earnings amid high living costs and a drop in consumer spending.
Analysts reckon earnings for the current 6 months will be down between 40 and 45% compared to a market expectation of about 30%. Harvey Norman did well during COVID, with revenues from products like office supplies and furnishings doing pretty well. But interest rates have hit household budgets. Harvey Norman is the latest in a string of retailers. Think Best and Less, Universal Store, Adairs, Premier Investments, Wesfarmers, etc., to warn about this slowdown. The question, though, is why the jump in the share price? I was going to just ignore this and pretend that, but to be honest, I don't really know the answer. You have this massive downgrade and then get a 5% share price jump. The inflation news yesterday helped retail stocks, but that's only going to be part of the reason. I mean, maybe the Harvey Norman news wasn't as bad as some analysts expected. Not really sure. It's just kind of interesting that you can get such a massive downgrade and then end up with just about the best performing stock on the share market.
Curious.
I am curious. If anyone knows the answer, please let me know.
Yeah, indeed. Now, Sean, the number of households on hardship payment plans to repay electricity bills jumped by 19% during the first quarter of 2023. This is according to the Australian Energy Regulator. That's pretty confronting.
Yes, it underscores the impact of the recent surge in electricity prices, and the figure could yet go further as Australians will, from July 1, begin paying even higher bills. The Australian Energy Regulator said between January 1 and March 31, 1.3% of all Australian households were on payment plans to repay electricity bills, according to a story in The Australian. Customers repaying gas bills via payment plans also rose. Queensland had the largest quarter increase, with 15% more households on payment plans. South Australia has the biggest number of customers on hardship plans, with about 2% of all customers on structured payments after being unable to pay their bills when due.
Sean, last story before we get to international news, a bit of good news for any parent who's ever been hassled at the checkouts to buy something. Woolworths is set to remove children's lollies and confectionery from checkouts and instead use the space for healthier food choices.
Yeah, bad news for we adults, though, that like to buy the Mars bar on the way through.
Well, I tell you what, I'm actually just thinking about this now, and putting together a list on the fly of the top 3 checkout chocolates. Number 1 is the Milky Way, number 2 is the Caramello Koala, and number 3, the Curly Whirly. What's going to happen to the poor Curly Whirly now?
So are these real, or are this just your top 3?
This is according to, it's an extensive survey of one.
Michael Thompson's family. So what is that? Milky Way wouldn't make my top. Caramello Koala, absolutely. Curly Whirly, wow.
Yeah, Milky Way is the classic supermarket chocolate because it's the one that you can give to the kids as you're doing the shopping, or you can eat it yourself as you're doing the shopping.
Do you pay for it?
Yes, of course you do. You take the empty wrapper and you scan that. And I reckon when I was working at Bilo on the checkouts, this is quite some time ago, I reckon I scanned more empty wrappers for Milky Ways than any other empty wrappers. But yeah, so the Milky Way, and also they're typically about 50 cents. So they're an affordable option for in a cost of living crisis. Milky Way, number 1, Caramello Koala, number 2, Curly Whirly, number 3. It is the quintessential checkout chocolate. And now that they're not going to be stocked at the checkouts, I fear for the future of the Curly Whirly.
You might be right. Do you know what Woolies calls these? Woolies calls them sometimes food.
Yeah, sometimes you can get out of the shop without buying the kids one. Yeah.
So, apparently the aisle ends will still feature these sometimes food. Treats, things like chips when they're on special, they'll still be on those aisle ends. But they are trying to include much greater snacking options, and they're using the Health Star rating. Anything above 3.5 stars is considered healthier, at least in Woolies' view. And so they're going to put those next to these sometimes foods, apparently. Supermarkets Managing Director Natalie Davis said the shift should make a positive change to shopping habits. I wonder if that's the case. Maybe.
I'm still stuck on the Curly Whirlies.
Yeah. By the way, she also mentioned yesterday that vegetable prices are lower after months of price inflation. So that's some good news for we healthy people, pescatarians out there,
International news now. New Zealand Prime Minister Chris Hipkins has received a warm reception from Chinese President Xi Jinping in the pair's first bilateral meeting.
The leaders met in Beijing's Great Hall of the People late on Tuesday night, with Xi labelling New Zealand a friend and partner. He said bilateral ties have continued to grow in a sound and steady manner, and amid the changing international landscape, the relationship between the two countries has remained robust and strong, bringing tangible assets to both economies. Now, the meeting is the centrepiece of Hipkins' 5-day trade mission to China this week. Hipkins said he felt comfortable with Xi. He said he was easy to speak to, and he repeatedly labelled the meeting warm and constructive. Hipkins said that at no point was the meeting adversarial. There you go.
That's good news. Now, UBS is planning to cut more than half of Credit Suisse's 45,000 strong workforce starting next month as a result of the bank's emergency takeover.
Bankers, traders, support staff in Credit Suisse's investment bank in London, New York and some parts of this region in Asia are expected to bear the brunt of most of the cuts, according to Bloomberg. Staffers have been told to expect 3 rounds of cuts this year, the first by the end of next month, then 2 more rounds tentatively planned for September and October. UBS, whose combined workforce jumped to about 120,000 when the deal closed, has said it aims to save about $6 billion in staff costs in the coming years.
All right, last one, Sean. The Rugby World Cup starts in a couple of months in France, and the New Zealand All Blacks, whom for decades have been among the best or the best team in the world, is called on a French fashion designer to help with their kit.
Not only are they going to beat us, they're going to look good while doing it.
It's just like the ultimate insult, isn't it? It's like, you know what? We're not even worried about training. We're focusing on what we're wearing. We are that confident.
With good reason. That's what's even more infuriating. So Adidas, which supplies the team's iconic All Black kit, has teamed with Paris-based street-style designer Faye the Wolf is the person's name. Don't you love that?
Sean, quick question for you. Do you know what a street-style designer is?
Certainly not one called Faye the Wolf. Absolutely no idea.
Not particularly familiar with his work?
No. Anyway, Faye the Wolf, He's coming in to develop unique features in a new jersey for the tournament. Now, this is according to New Zealand Rugby. They say that the designer is known for his distinctive and creative use of the colour black. See, not a lot you can do with black, but anyway, well, actually, that's where I'm probably ignorant. You probably do a lot with the colour of black, but and he's worked with some current players in the Adidas design team to create a jersey centred around the New Zealand silver fern. Apparently, the new jersey also has leading technical innovations that aim to lift on-field performance and make players difficult to tackle.
A black, so black that it absorbs all the light from around it, and it looks like the players are actually running through a black hole. That would make them difficult to tackle.
That would be good. That would be good. The World Cup kicks off on September 8 in Paris with New Zealand playing France.
It's been a show, Sean.
It has, and that last one, just what we need. We need the All Blacks to actually have some technological breakthrough in their jerseys so that they're harder to tackle.
That is a cracker of a story and cracker of an interview coming up next. This is a really good one. You're speaking with Peter Gray, Larry Diamond, the co-founders of Zipco.
Yep, they've just had their 10-year anniversary, which is a pretty cool achievement in the buy now, pay later area because it has been a very, very tough run. Very confident about the outlook. Well worth a listen.
It is. It really is. It's up next in the Fear and Greed playlist on your podcast platform or at fearandgreed.com.au. And don't forget to have a listen as well to the latest episode of How Do They Afford That, which came out yesterday. This week's episode is all about pet insurance. Thank you very much, Sean.
Thank you, Michael.
It's Thursday, the 29th of June, 2023, and join us online on LinkedIn, Instagram, Twitter, and Facebook. And stay up to date on all the business news with Alexa and your Amazon Echo smart speaker. Simply say, Alexa, play the Fear and Greed podcast, and the latest episode should just start playing. Grab yours now at amazon.com.au. I'm Michael Thompson, and that was Fear and Greed. Have a great day.